In business news, in a bid to drive the pursuit to join the global community and advance digital services and enhance quality communications infrastructure for the benefit of the citizenry, the Nigerian Communications Commission says efforts are being made by the commission to timely auction available spectrum for 5G services across the country. Addressing journalists and other stakeholders at the consultative forum on the draft information memorandum for the 3.5 gigahertz spectrum auction in Lagos, the executive vice chairman of the NCC, Mr. Omar Dambata, explains that there is need for the industry players to understand the genuine vision of the commission to equip the nation with the latest technologies and services, which is focused on the efforts to deploy 5G services nationwide. Mr. Dambata explains that overriding consideration is not to generate money for the federal government, but principally to ensure the deployment of 5G services to enhance better life for Nigerians and growth of the nation's economy.
What we do is characterized by regulatory certainty and flexibility, as you are aware. And if there are challenges in the way and manner rollout obligations are not being met, we should be informed about these challenges. And we'll put heads together to find a solution to these challenges. That is our role. That is the approach of the NCC. You know, an approach that is most flexible, predictable, and we even deploy elements of regulatory diplomacy in our engagements with critical stakeholders.
The 5G services are so revolutionary in terms of normal communication capability that it requires a whole new range of devices. So this is building up now because the industry has been preparing for this for years, but the scale of this is still so big that we have to be patient for this to come up a little bit slowly.
Meanwhile, as inflation pressure continues to increase across the globe and weighing in on growth prospects of global economies like Nigeria, economic analysts have called for effective policy formulation from both monetary and fiscal authorities in the economy to tackle macroeconomic fundamentals. We're speaking earlier today on TVC News flagship business show, Business Nigeria. The chief consultant of B. Adedipe and Associates Limited, that's Dr. Biodun Adedipe, maintains that policymakers should continue to prioritize containing inflation.
Once people begin to have a fear about the near future, they begin to stop their normal economic activities of either spending or investing. We are seeing that playing out right now in the US, especially with tech companies. Most of them are sacking their staff in expectation that the US economy is going to recession in 2023. Okay? So that is because the thinking, the confidence that is coming not only from government functionaries, but even analysts like me, who are also influencers. A lot of analysts in Nigeria, they post negative interpretation of data, different than what the reality is saying. Okay? So if we don't take responsibility for putting out what is true and what is right, the facts, and interpret them also correctly, we send the wrong signals to the people, and people will behave based on what they perceive the experts are saying. And so if anyone will come and tell the public, for example, that Naira is going to lose value between now and end of 2022 or by June 2023, if people perceive this person as somebody that they call an expert, they want to also behave accordingly. So you see them begin to speculate on the Naira. You see them also begin to take actions that will make the economy to contract.
Dr. Adedipe there. Moving on now, the African Development Bank has promised to channel $150 million to the funding of small and medium enterprises through financial institutions across Africa to enhance financial inclusion while also addressing barriers to SMEs funding. AFDB's president, Dr. Akinwumi Adesina, made this known in Lagos, where he notes that the bank lines of credit interventions are increasingly being more targeted to support the development of regional value chains and clusters, with strong linkages to MSMEs through off-taker and other support to de-risk the ecosystem. Mr. Adesina, who was represented by the Director General of the Nigerian Country Office, Mr. Lamin Barrow, adds that the bank has prioritized support to MSMEs in its intervention across the high five strategic priorities, adding that the bank has supported more than 20,500 MSMEs and have contributed to the creation of over 440,000 jobs, with women and youths accounting for 60%. Nigeria's crypto startup Nestcoin says it has lost its stablecoins to the collapse of FTX, the second largest cryptocurrency exchange in the world. According to reports, FTX lent billions of dollars to Alameda, including some customer funds, which forced the price of FTX's token to fall by 86% in just 3 days. Binance, in a bid to help cover the liquidity crunch, acquired FTX, but the company later pulled out of the agreement, citing mismanagement of customer funds and alleged U.S. agency investigations, setting the stage for FTX to declare bankruptcy. Recall that Bankman-Fried resigned as CEO of FTX last week as the company, along with other 100 affiliate entities, commenced bankruptcy proceedings in the wake of a liquidity crisis that led to the collapse of FTX, one of the world's largest crypto exchanges. The stock market moved up to raise the prices of shares following gains by banks and manufacturing companies. Effiong Ekop has details.
The nation's stock market regained strength after weeks of debt losses. Stocks of Lafarge Wapco, Access Corporation and Bua Foods lifted threats in key sectors. Other gainers included Cornerstone Insurance, MRS, and ETI. Combined gains by these companies lifted the market index by nearly half of a percentage point. The list of business losers included Eternal Oil, Guinness, Scar, Cotsville, and Nemeth. 131 million units of shares worth over 2 billion naira were traded in the various market subsectors. Outside Nigeria, African stock exchanges traded largely in the positive territories. The JSE in South Africa closed in green following investors' interest in government bonds. In Kenya, the Nairobi securities market closed with higher indices as many investors booked for banking securities. Finally, the market in Accra, Ghana, closed with rising prices in the various trade sectors. Effiong Ekop, TVC News, Lagos.
Asian stocks dropped and the dollar gained today after the blast in Poland and Ukraine, and Polish authorities say it was caused was acquired Russian-made missile. Worried about the potential racketing up of global geopolitical tensions spurred a drop of 1% in MSCI's broadest index of Asian Pacific shares outside Japan. Australian shares fell 0.4%. Japan's Nikkei dropped 0.1%. Hong Kong Hang Seng shed 1.1%. China CSI 300 fell 0.4%. By midday break, U.S. stock futures, the S&P 500 E-minus fell 0.2%. In early European trade, the pan-region Euro stock 50 futures lost 0.9%. German DAX dipped 1%. FTSE fell 0.5%. Finally, crude oil prices slid today as COVID-19 cases in China continue to climb, sparkling worries about of a lower fuel demand in the world's top crude importer that outweighed concern about the escalation of geopolitical tensions and tighter oil supplies. Now, U.S. West Texas Intermediate crude sells at $86.53 per barrel, down 0.45%. Brent crude futures experienced a decline of 0.27% to sell at $93.61 per barrel. Bonnie Light also in the red zone, selling at $93.14 with a downward price margin of 1.64%. And for the OPEC basket, crude oil dealers are offering $94.42 with a downward price review of 0.45%.